Robert Schein, Chief Investment Officer at Schein Wealth Management, is with me right now. Good to see you. Some of your thoughts on the market. How optimistic are you?
Great to see you, Nicole. To be honest with you, where we've been to where we are, and the markets are close to all-time highs, no one would have guessed if you add in all of the headlines that we've lived through. So you have to be very optimistic moving forward. And the reason why, not only of the work that's been put in and what the market's been resistant to of all that uncertainty, but moving forward, we now have the backdrop of a potential Fed cut later this year. We have the backdrop now of Congress moving and advancing that tax bill, which would be a huge incentive and a big bullish signal to the market overall. And that's just some of the few items to be positive about for the next 6 months.
I mean, if they don't pass that, it's my understanding that could actually stall the economy because everybody's waiting for those extended tax cuts. Those are really the tax cuts that go back to Trump 1.0, and then the Biden administration extended those, feeling folks still needed that after COVID, and they're due to expire. If they don't pass it, that could be somewhat detrimental to the economy, or no?
That's exactly what the market is holding on to and completely focused on. That there's a no-win option on this one. Congress has to act, and the bill has to be passed. It's the biggest economic story of 2025. So we believe we will see something. I think the administration is pushing something prior to July 4th. But even if it doesn't, and it continues till maybe at the end of July, early August, we believe a bill will be passed, but it will be the biggest economic story of 2025.
And now at this point, let's talk about some of your stock picks and how you would go ahead and try and create some wins for folks. I'm sure some are more growth oriented, some are more conservative. Let's start with some of the stock picks. I know you have NVDA and Amazon on there. Tell me a little bit about that.
Yeah, we've loved NVIDIA and Amazon for quite some time. NVIDIA is just firing on all cylinders. They're the clear leader, and they're going to win and continue to win the AI chips race. But it's not just chips. They have storage, they have power, and the revenue growth is continuing to exceed expectations, as well as earnings. And Blackwell production, their next generation, is ramping up even faster, and I think it's going to be better than even some of the analysts are estimating. On the other hand, we also have Amazon. Everyone loves Amazon Prime next week, and that's for the consumer. But their ad revenue is up 19%. Their AWS is up 17%. And then you add in the AI effect and everything that they're doing. And oh, by the way, the cost cutting that they've been doing for several years, they're ramping up. We believe that we could see 20% growth year over year for the next 5 years. Those two, NVIDIA and Amazon, are compounders. And that's why we like them in our client portfolios. Finally, we always like to say you want to add some defense to your portfolio. By that, I mean we like the Invesco PPA. So it's aerospace and defense. It's an ETF that's a basket of about 25 companies that are defense focused. And if you look back, we always say, Nicole, follow the money. Obviously, we had a lot of geopolitical headlines going around the world right now, and defense spending, from NATO upping their budget to 5%, to what Trump did back to the UAE back in March. He brokered a $1.5 billion deal for arms. So in there, it's the next generation of defense spending. You're getting drones, you're getting cybersecurity, which is all too important in today's world, as well as space defense. And so you follow the money. That basket is a diversified basket of a nice play to add some defense to your portfolio in an uncertain geopolitical world.
And at this point now, thank you for all of that. NVIDIA, Amazon, and PPA, the Invesco Defense and Aerospace ETF. The other Mag 7 names, are they interesting to you and you're just not picking them at this moment? I mean, because, we know Meta's looking at more and more AI acquisitions. Microsoft's near a high. Tesla is always sort of up and down, and an exciting name to watch, I guess. You tell me, and many of the guests who come on say, I like Alphabet. It's the one that, sort of is forgotten or whatever. I mean, do you like some of the others too?
We love them all. Google is continuing to do what they do best and capture the market. We're seeing that ad revenue growth, and none of the Mag 7s are resting on their laurels. I think that's what the greatest part about this is they each have their own respective lead, but they're not afraid to spend money. Let's look at Meta. Meta is going all in on this AI race, and it's going to help them 5-10 years down the road to continue to be a leader. I think the lagger this year would be Apple. So maybe a year from now, I think Apple will catch up relative to its Mag 7 peers. And I think there's some great valuation even in Apple as we speak today. Again, they're going to continue to innovate. They're going to continue to tap into that 2 billion consumer base of just clients that they have. So they'll innovate and continue to catch up. But the Mag 7, I think your previous guest, a former partner of mine, Michael Bappas, said that technology is going to be here for the next 100 years. I couldn't agree more with Michael as well.
Oh, I didn't realize that you know one another or had worked with each other at some point. That being said, you do have fixed income, and there are opportunities there as well. I don't want to leave that out. What would you recommend there?
Well, there's 1.7 or $7.4 trillion in money market right now. And we urge investors not to get caught off sides, meaning if we see interest rates drop later this year, you're going to want to start putting that money out of money market into interest-bearing fixed income investments, whether it's treasuries or even in the intermediate end of the curve, to start locking in rates right now. Because if rates come down, you're going to lock in that yield, but you're also going to get some appreciation as we see that play out.
Meantime, is there anything you would stay away from at this time that has just really left a bad taste in your mouth? I'm not really interested in that at this time. Is there anything that falls into that category?
I think with the exception of Tesla, they're in their own category, but the EV space, there's a lot of unknowns right now from an investing standpoint, because what we don't know is going to be passed in the bill, the tax bill. There could be a lot of EV incentives, or there could be completely stripped out. Again, that's for Congress to decide. So that could be some big winners, some big losers, depending upon how that plays out. So right now, I just sit on the sidelines for the EV space. But if you like Tesla, I think Tesla's got sort of a category of its own beyond just what the EVs production that we're seeing from Tesla.
Yeah, because it's not just an EV car, it's so much more. Let's talk about just one last thought. I know you also have an interest in financials and healthcare. Those are two areas that you tend to like, right? How are you feeling about those groups now?
Yeah, healthcare is solid dividend grower. There's a lot of great opportunities in the healthcare space, and also balances the portfolio by paying us, the dividends and growing the dividends. They haven't performed the best year to date, so that could be a catch-up play relative to some of the other sectors. But financials are now catching a bid, and that's kind of interesting. And we like to see that, because if you look at the M&A activity that we've seen recently, the IPO activity that we've seen recently, and some of these names, these large cap names in the financial space, are providing tremendous value moving forward. So if we continue to see this trade and the economy chug along like it is, and a lot of deal making playing out and more of a favorable backdrop for the remainder of the year, financials are the place to be as well.
Yeah. Robert Schein, Chief Investment Officer of Schein Wealth Management. Thank you, Robert. Good to see you. Appreciate it.